So what are you expecting from the ECB? Because also you referenced it there. That is also part of the conversation around bonds at the moment. The market seems to be, reining in expectations of stimulus, and yet at the same time still expecting big things from Mario Draghi.
Yes, I think Draghi is known not to ever disappoint markets. So we deep within markets do have a lot of expectations from this meeting. So looking at Thursday, we are looking for a package of policies. So we are looking for a deposit rate cut of 20 basis points. We are looking for a QE program, which could be as big as 40 billion per month. And this should come along with a tiered deposit system as well as a strengthening of forward rate guidance. I think right now the contentious issue is on QE. As we see, the ECB members are still divided on whether we really need to restart QE. So I think even if we get a 20 to 30 billion QE move, I think it should be positive for markets.
Some people have suggested maybe Mario Draghi will play with the timing of the implementation of any QE, maybe announce things this week, but then leave it a little while to implement when we see how trade tensions play out towards the end of the year. What's your expectation on that? Is that one way that he could take on those hawks?
So in July, he basically did open doors to all packages, which included QE. I think right now, if he does just open doors to QE, it will definitely come as a disappointment for market, because we have seen some extreme pricing going on in bond market as well as in euro market. Our entire bond market is trading negative right now. It's just due to the QE term premium. So I think just an announcement will not make markets happy. But as seen in previous QE announcements, we could get the announcement right now, but the actual implementation takes place from November onwards to give markets some time or some breather to actually prepare for the new QE that's coming in.
And if he wants justification, perhaps he looks to inflation and global inflation then to guide him. I'm looking here at Chinese PPI and the way that actually does seem to have some bearing on the European inflation story. And of course, we've seen Chinese PPI really lagging in recent months. Is that part of this will be part of the narrative, I suppose, come Thursday?
Yes, exactly. So far, the domestic data has not been that bad as compared to the global risks that are there for the European economy. So if you see, ECB members have always talked about Brexit. They have talked about the auto sector, which gets affected by the manufacturing that's happening, as well as the US-China trade war. So these are issues that are just lingering. And I think Fed will also have the same issues. There are certain issues that have not been concluded, and they have to act just because markets have so much pessimism on these topics.
It's a sort of laundry list of negatives, isn't it? I mean, the same ones being talked about at the auto show in Frankfurt.
Exactly.
These executives reacting to the same things. Pooja, let me ask you a little bit about volatility then in bond markets. We're asking as our question of the day on the Markets Live blog, has rates volatility topped out for 2019? We saw such volatility in August. Things look calmer on the trade front, as you suggest, or at least the narrative out of the White House was a little more positive. So has volatility topped out?
So to some extent, yes, because September was the key meeting where markets were preparing for all form of easing coming in from Fed as well as ECB members. And I think we are heading to a time where we could see some conclusion with respect to everything, including Brexit. So I would say, yes, volatility could calm down, but this also comes with a lot of expectations from central bank policy makers. Like, right now, everyone thinks that Fed, BOE, I mean, whoever you talk about, G10 central banks, we are looking for easing expectations.